Hey everyone, so let's drop one more video for today. I'm going to take a look at the indexes as well as gold. So first I want to take a look at SPY. And SPY, I talked about this in the other video, and to me, it appears to be what looks like a distribution pattern. And a distribution pattern is basically where the big boys are kind of selling things slowly and building short positions, but they're doing it really slowly to the point that people aren't really noticing that it's happening. That's what I think. I could absolutely be wrong, so don't just blindly follow me for what I say. I could absolutely be wrong, but based on my analysis, my opinion, my experience, this looks like a distribution pattern. And I compared it in the other video that it looks eerily similar to Tesla up here, where it kept gapping up and selling off, gap up, sell off, gap up, sell off, and it's just stuck in this range for a while. And you all seen what happened to Tesla after that. Let's take a look at SPY. And it appears quite similar to that. And past 3 days, gap up, sell off, gap up, sell off, gap up, sell off. 3 days in a row now. Now we had the bearish MACD cross on the daily. The bulls are trying to make one on a bullish MACD cross on the daily over here. It's crossing, but it's not strong enough for me to believe in it. And the RSI doesn't look super strong. It's above 50, but it's not showing real strength. On the weekly, it appears that we're starting to form a potential bearish MACD cross on the weekly. And we go back, the last time we really formed a real clear bearish MACD cross on the weekly was before the coronavirus dump. So we were crossing here, but nothing was clear enough to say it was a cross. If we really start getting a cross and we start getting that blue line really further below that orange line, then that's more of a cross, and that could be a negative sign, as you've seen what that signaled over here. So we keep making these higher highs every day. We had a little bit of a double top here. We couldn't pass the all-time high on SPY. I would exercise caution as a bull over here. Okay, anything could happen, but right now we're in a bit of a rising wedge, hitting higher highs every day without follow through, a little bit of a double top here, gapping up each day and selling off, and potentially getting that bearish MACD cross on the weekly. So SPY, I would exercise some caution over here. Let's take a look at the Nasdaq. If SPY is dropping, more than likely Nasdaq's dropping, because the stocks in the Nasdaq, many of them are on SPY as well. SPY is closer to the highs than Nasdaq. SPY is really up there near the highs, and that's because the financial sector and healthcare and a lot of the value stocks have been doing much better than the tech stocks that are on the Nasdaq. Nasdaq, I'm looking potential. Could this end up being a bearish head and shoulders over here? It's possible. We haven't nearly formed that right shoulder yet, so that's just an assumption of what could potentially happen. But again, I'm kind of a bear, so maybe I'm looking on the bearish side of things. If I had to look on the bullish side of things, because my bias is kind of bearish, if I have to look on the bullish side of things, we've got a higher low multiple weeks in a row. 1, 2, 3 weeks in a row, we got the higher low on the weekly. It is still healthy consolidation right now. We are above the red line on the weekly over here. Okay. Potentially forming a bull flag here, although it's a little bit overextended. Bull flags don't usually take this long to play out, but it's very possible. It seems to be healthy consolidation right now on the Nasdaq. It has that double bottom down there, high volume at the low, so there is some definite good signs. I think the concern here is that we're consolidating and trapped right under this area, which was a previous support area, as you can see here, right around where we double topped, and now it's become a clear resistance area. So definitely the bears are fighting here, the bulls are fighting here, they're battling it out. We're going to see who wins. If the bulls start pushing above this line and holding it as a support, then I could say we may very well be headed back to all-time highs and higher. But right now it's a struggle over here, and we're trying to see how they play this out. So we're going to see, same thing. We're gapping up on that every day and then selling off. If we look on the QQQ, the other one I was looking at, same thing, but it was the Nasdaq futures. Okay, let's take a look at gold. Gold over here, we broke the high, but without follow through, upper wick of profit taking. Looks like gold's due for a little bit of consolidation over here. Possible bearish MACD cross converging on the daily. I look on the weekly. We're a little above the red line over here, which touches it almost every week. That's at 1881 on gold. Not too far away. It's a little bit of a pullback. Nothing too crazy, but looks like we're due for some consolidation on gold as we were getting a little bit overbought up there, but the weekly still strong. We just recently had that bullish MACD cross on the weekly, so I don't expect us to dump or anything. Looking for healthy consolidation on gold. We have quite a clear resistance area on the monthly up here around 1959. So bulls definitely want to break this area to head up to that upper Bollinger Band and test that all-time high around $2,075 on gold. Right now, I don't think that's going to happen just yet. Looking for some healthy consolidation around this range, potentially as low as 1875 or so. And we'll go from there after that happens, if that happens, or perhaps we keep pushing. What I noticed today was that this morning, I don't know if it was inflation figures or something came out, but Bitcoin and cryptos shot up while gold kind of went down and bonds went down at the same time, which means yields were going up, interest rates were going up. All this morning at the same time. I don't know exactly what was going on, but that was something interesting to keep in mind. The thing with gold is there's a little bit of a double-edged sword, whereas gold is supposed to be an inflation hedge, but at the same time, if inflation is ticking up and interest rates in turn tick up as well, that's not necessarily good for gold. So high interest rates is not necessarily good for gold because sometimes people rather keep their money in cash and get the interest than keep their money in gold. But in past history, gold has performed well in high inflationary periods. So we go through long-term history, it's performed well in high inflationary periods. And we look on that 12-month, and this could be a potential large cup and handle on gold. Typically on a cup and handle, you'll look for the right side to be lower than the left side and it to consolidate below and then break the high. But this side is above. So I don't know if I could fully consider this a cup and handle, but it does look like one. It's got that shape in essence. And it also depends on the currency. If you look at gold on I don't know if we can look at on CAD. Gold to the Canadian dollar took off a lot more if you take a look at it. Wow. Now it's dropping off a lot more because the Canadian dollar has been gaining strength. So it really depends on what currency you buy your gold in because it depends on the strength of the currency. We take a look at the DXY, which is the US dollar index, and it's been getting crushed. The last several months, it's been getting crushed, not doing well. It shot up during the coronavirus spike. And basically, when money's coming out of stocks, especially US stocks, because there's so much money in there, the money leaves the stocks and goes into the currency, and that actually pushes up the value of the currency, which is what happened here during the coronavirus crash. The US dollar shot up significantly. But as stocks rebounded, US dollar's just been getting crushed. As stocks rebounded, they decided to print so much money. The US dollar just got absolutely crushed. It's trying to form support here against the Canadian dollar. If we look over here, it looks like it could be a falling wedge. So is perhaps the US dollar going to start gaining strength? If the US dollar does start gaining strength, that's not necessarily good for gold, but gold does seem to be holding up well overall thus far. But that also tends to mean that stocks are dropping. So if stocks are dropping, then the US dollar is probably going to be going up because there has been an inverse correlation. There isn't always an inverse correlation. Sometimes the US dollar goes up and US stocks go up. Just like the TSX has been explosive. It's been one of the strongest indexes. And yet the Canadian dollar has been rocketing as well compared to the US dollar. This is the opposite. If you look at the Canadian dollar compared to the US, CAD USD, it's the opposite. Nice increase. Our dollar's been gaining strength. and our index has been going up. So I'm going to keep in mind today, I was taking a look at the VIX and I'm like, why is the VIX up so much today when the market wasn't even down or was barely down? Yet the VIX was up nearly 7%. So that was interesting to keep in mind. The VIX does tend to spike every once in a while, and every time it does spike, usually there's a decent decline in the stock market, at least in the short term. Now, obviously, over the long term, the S&P 500, Nasdaq, and stuff, they should do well over the long term. These are heavily diversified indexes. Okay, so if you're long and you have a long-term outset, the question is, do you want to try and sell and buy back cheaper, or just hold it out for the long term? It should be fine over the long term. Short term, for me, I try to avoid these downturns because they do happen. And while every downturn in recent times has gotten picked right back up, it's not always the case. Sometimes there is downturns that last years or take many years to recover. Let's take a look at the Nikkei. You know, it still hasn't recovered from its bubble peak in 1990. It peaked in 1990. And to this day, it still has not recovered, the Nikkei, which is the Japanese stock market index. So anything is possible. It's going to recover one day, but it's taking quite some time. So always want to be cautious, always want to be protective, but at the same time, want to have some investment in the market. Don't want to be afraid either, because scared money don't make money, right? So keep your eye on that. That's my little analysis for today. I'm going to get better as I keep practicing this. I'm just starting out. I want to make things fast and to the point, and also break things down really clear and concise for you guys. I hope I help you guys a lot. Be sure again to subscribe, like, comment, share. That's all going to help me grow my channel and motivate me more to keep making these videos. And also, please check out my course, the Professional Stock Trading course. I'm going to teach you all of this stuff and more in more detail, and my proprietary strategies going to be in there as well. So check that out. Thank you for watching.